Hello, everybody. Welcome to another episode with the Money Fit MD podcast or show. I am excited to be here. Always, always, always an honor to be in your ears. And today I have a guest that I think you guys are going to like. Some of you guys are going to hear his voice and go, "What's a dude doing on your podcast? Y'all be nice." And then some of you guys are going to watch on YouTube and you're going to go, "What's a white dude doing on your podcast? Y'all be nice." I just had to get that out there. All right. So I am, it really is a privilege and an honor to share my guest with you guys today. He is someone that this is not our first time talking, but is a financial advisor that works with a financial group that I've actually known now for, I want to say, a year and a half or so. I had the privilege of connecting with their founder, one of their co-founders, earlier last year before I traveled. And it was a conversation offline. We were just getting to meet like two humans do. And there were many things about him and his philosophy and principles that actually impressed me enough that I let them be one of our sponsors for our in-person event. And so recently I was like, well, I would love for you guys to come share my podcast. I want you guys to come share with my audience. I want my audience to know you because we're not anti-financial advisors here. We're just pro women physicians being the CEO of their finances. We're pro people understanding that a financial advisor does not replace you in your finances. So I get to hang out with one of their members that I've also had a chance to get to know as well. So without further ado, welcome. I was going to say Dr. Baker, but welcome, Hugh Baker.
Nope, not Dr. Baker. But again, yes. Hello, Dr. L. Honored to be let on this podcast here. Looking forward to it. Excited about it.
So talking about Dr. Baker, is your wife Dr. Baker or does she have a different last name?
That's Dr. Horvath, right? We got married right after, I think it was graduating med school. So, it's like a couple $1,000s to change that. Not that that would make a difference. Like, I think she would probably keep her last name anyway. But yeah.
You're like, that's $1,000 we don't want to spend in that way.
Yeah. Not, that really wasn't a big, and think about it, like having to change all of your documents. That's not something I would want to do. Sounds
agree.
terrible.
It's a hassle. I mean, right now I got 3 names. I have my maiden name, I have my married name, and I have the hyphenated one. So I tend to use Akintade with my social media and stuff, but clinically I'm Ali Akintade, and in some world I'm Ali. It's all like a mess. Don't like Claire. When I'm using Claire at the airport, it's confusing because I'm like, I don't know what ticket. I don't know if this is Ali ticket or this is Ali Akintade, but it's a mess. But anyways, we're not talking about that today. I'm so glad. So for our audience that are listening to this, can you tell them how did you become a financial advisor and why would anybody in their right mind become a financial advisor?
Yeah, well, it wasn't something that I set out at, a 12-year-old saying, I want to be a financial advisor when I grow up. Really didn't have much of any idea what I wanted to do, and really not even through college. So one of my first jobs getting out of college was in banking. And after a while, I kind of found that to be less exciting and saw, okay, there's a financial advisor over there in the branch. Seems to be what they're doing is a little bit more interesting. So I'll start going that direction. So got into it for that reason and then just learned a lot. And then really just wanted to be able to help people make good decisions with their money.
And have you been able to do that now? Do you feel like you're doing that with the kind of work you do? Or are you like, no, I'm out of here?
No, I really love what I do. I love the firm that I work for and with. I love the clients that I work with. So being my wife, a family medicine physician, and our firm focuses on younger physicians. So think maybe right at the tail end of training or maybe within 10 years out of training. That's really our focus. So because of that, I don't have to be all things to all people. I kind of have this narrow lane that I know very well. And, just from feedback from clients and just helping them make bigger life decisions, do I want to drop down to 0.8 FTE or, 0.6 or making these other bigger decisions? That's really where I get the most enjoyment out of my job.
So I'm curious. So you did not grow up saying I wanted to become a financial advisor, and at some point that journey shifted for you. I'm curious to hear about your own personal financial journey since you became more educated and more aware of finances yourself.
Yeah. So here's a good one. So when I started working at the bank, I think my 401k decision was based on what had the highest performance in the last 3 months, right? And I think it was actually like a bond fund. So think there's a 22-year-old putting their money, all of their 401k money in a bond. I had no idea what I was doing when I was at that level. And then, just being immersed in it, continued learn more and more. Definitely did not come out of college making the big bucks, right? Just kind of making ends meet while my wife was still in med school at that point. Eventually, she went to residency. And I remember, it's kind of funny now, she's been in attending for like 6 years. I remember looking back when she started residency, like, wow, we're going to be making like, she's going to make 50 or $60,000 a year. This is great. We'll be able to get a better apartment. Like, and now things are so much different. So it's kind of amazing how um, your views change over time.
So you mentioned 22-year-old investing in bonds, and I was here chuckling. But we have a very diverse audience. For someone that's listening right now, why is that a horrible idea?
Well, bonds, think about it like you are loaning someone money and they are going to pay you an interest rate. Generally, bonds do not move up very much in value. Stocks, on the other hand, are more short-term ups and downs, but over the long term, you look at any, say, S&P 500 chart, you'll see it's going to go up and to the right over long periods of time. And when you're young, um, you can't even touch that money until you're almost 60 years old. So what is even the point of trying to invest in something that's going to be um, stable? I'll use that for lack of a better term.
Thanks for explaining that. So I'm curious about your wife. She's a physician, and now you work with physicians as a financial advisor. I'm curious to hear how, as your relationship really impacted how you advise people or not when it comes to financial advising.
Yeah, it kind of feels like I'm talking to friends from residency day in and day out from my job. But I think seeing her journey, and I don't know how much of this is maybe skewed because I see what family medicine and primary care looks like. But I think when I hear people say, I want to work 3.5 days a week or something like that, to the average advisor, and maybe work with people in different professions, that might kind of sound crazy to you that someone in their 30s with this high earning power wants to work 3.5 days a week. But when you learn, like, oh, actually that means you're going to get double booked all the time, you're going to get 50 results in your inbox on your day off, your air quotes day off that you have to take care of. I think coming from a place of understanding on the way some of that stuff works, I think that helps like my perspective when people bring up some of these goals. There shouldn't be any judgment anyway, but I think it helps me understand where they're coming from a little bit better than maybe the average advisor.
So I got to ask you, who is the money person? Is she a money person as well in the relationship?
So like money conversation wise, I would say she probably drives maybe a little bit more of it than I do. I'm kind of the button clicker, right? Managing the investment accounts, which most of it's automated, but taxes, reviewing tax returns, moving the money around in accounts, getting it invested. That's a little bit more my arena, but she's definitely, I'll say, more detailed and in tune with day-to-day spending, and really drives more of like big picture values conversations. That's more of like a collaboration between the two of us.
I love it. So when you're advising folks, do you see that playing out where maybe one party is not interested in money, and how like does that, I'm just curious how you see you guys' dynamics working together versus what you see more often with working with other physicians that are not your spouse.
Yeah, so sometimes you'll see like one spouse is doing all the talking, the other one's kind of sitting back, maybe looking at their phone or looking around. And sometimes you just as simple as, you know, hey, Mike, is there anything you would add to that? Or, that type of thing. Just trying to get them involved in the conversation. I think sometimes people think, oh, I don't know anything about this stuff. My spouse knows it, but that's really not the point. We're trying to design your money around a life that you want to live, and that involves both of you, and both of you have opinions. And if you never bring your opinion up, that's just going to create resentment down the line.
I love it. I love it. And I think sometimes having that third party, that unbiased, quote unquote, third party can be very helpful when it comes to conversations around money in couples as well.
Definitely. And for some people, the way we're doing things, we're not trying to beat the market or anything like that. There are times where the market as a whole goes down, like, for example, 2022. And if there's a third party managing your money, it's not, hey, it's your fault as the spouse. Why didn't you know the market was going to go down? Blah, blah, blah. It's there's a third party there, and we can have a conversation about, avoiding trying to time the market and all of those things. And that releases, I think, a lot of stress in relationship too.
So I love that you mentioned that. Absolutely. When it comes to like fighting, like, it ain't me, it's the market, bro.
Yeah.
Like,
Yeah. And
okay.
I am happy to answer that question. Like, I can answer it for 100 people. So I know how to do that. That's something that, you can steer clear of, and that doesn't have to be on your plate.
So let me ask you, if someone is coming to you right now, they are good with knowing what they're earning and where their money is going, what are some principles when it comes to investing that you usually like to educate your clients about? Specifically when it comes to investing principles that maybe most people in the world are not taught about, because we don't talk about money enough, in my opinion.
Yeah, I think investing principles, a couple of different routes we could go here, but I think in terms of the investments, like to themselves, like once you've decided how much you're going to save or invest, or what accounts you're going to use, the types of investments that you are clicking buy on. Generally, our philosophy is, I don't have any advantage over anybody out there. Neither do you, in terms of what stock is going to do best. So diversify, of course, invest in, at least our philosophy, investing in like index funds. So funds that track the overall market at an extremely low cost. So you might see some actively managed investment funds out there that, not even, forget the advice piece, like just the investing in the stocks might cost you 1% of your return. And studies show somewhere between 80 and 90%, depends on when you start and stop the goalpost there. They don't beat their benchmarks. So why are we even going to spend any time doing this? Let's just own the benchmarks. Let's get the returns that we're entitled to through the market. And let's focus our energy and attention on the things we can actually control and the things that have high impact, rather than spinning our wheels on something we can't control.
So passive, almost not trying to beat the market, because the market is maybe doing better than you putting your money in a checking account in a way, right? And
Yes.
if active is not necessarily going to get better return, why are we paying all the money and the cost that usually is associated with active investment? Is that correct?
Yeah, that's right.
Okay. All right. Fantastic. Thanks. For any other principles that you live by? You're like, if I woke you up right now at 3 o'clock in the morning, well, I don't know. You already are woken up at 3 o'clock in the morning by your newborn baby. Is that right?
Yes. Yes. Thank you, Mira. She's so
So
cute though, it's like
I,
just happy smiles looking at you like,
of course, so
how
you
can I
don't
be
give
mad?
her back. That's why it's a strategy.
Yeah. Yep, she's pretty good.
It's a strategy. So if someone came to you at that time at 3 o'clock in the morning and are like, what other principles do you recommend or do you live by when it comes to investing? What would you say?
Mhm. Investing, I almost want to take it a little bit more bigger picture and just being intentional with where your money is going. I think not enough people pay enough attention to what they're spending their money on or what they're saving. I think you mentioned in one of your episodes lately, I think it was 251, where if you don't change the input, the output isn't going to change, right? You're going to keep getting the same results. Um, I know it's not fun to carve out time to talk with your partner if you have someone like that in your life about what's important to them, but good like long car rides are good for that. That's like step one. Let's figure out what we're actually trying to accomplish here, because maybe that means stuffing as much money as we can in tax advantaged accounts that we can't touch for maybe 30 years. Maybe that's not the right answer, where maybe the financial headlines and all that will tell you, pick this stock or invest all your money in 401ks and IRAs for the tax advantages, but it's more about looking big picture. And then you can start planning out, where your money should go, and depending on when you need to pull the money out. So I think that's really the most important step.
I love that because many times people don't think about where they're trying to go. It's like getting in a car and just pressing the accelerator. Unless you're trying to get away from your spouse or your kids or your laundry, that's usually not a good
Yes.
idea, right? You want to have a destination. And that's why personal finance is so personal, because where you're trying to get to really determines what you're trying to do. Like people would send messages and go, Latifat, what should I do? I'm like, this is a deeper conversation than what should I do? Because the mistake that people make is they're trying to do like what seems like the hardest thing for the moment, which is what you were doing when you were 22,
Mhm.
looking at like what's the best return in the last 3 months.
Right.
Right. But do people come to you guys and tell you that like what is the cool thing now to invest in?
We get some of that. I think our marketing team does a good job of kind of letting people know ahead of time when they schedule with us, like what we're all about. But we do get some of that, like, hey, what do you got for me, kid? Like, what's the hot investment tip? But it really is rare for the type of crowd coming to us.
That's good. That's good to hear. And so in your firm, when you guys are making investment recommendations, are you doing primarily stock market or do you also advise outside of the stock market?
We do primarily stock market. We do have some people that have rental properties. Sometimes they're accidental landlords. It's like an old house, and you just interest rates super low. Rent prices have gone up, and it just makes sense to hold on to that and continue it as a rental. But we're generally not going out of our way and say, hey, I was looking at Zillow in your area and you should buy this property and rent it out. Or, hey, I think you should invest in this real estate syndication or private fund. Sometimes people bring those to us and we can help, poke holes or find red flags, but that's not something we're generally going out of our way to recommend they invest in. On the real estate side, we do layer that in with just a very basic index fund that invests in real estate. So anywhere from really big apartment complexes across the nation to a company that is, I believe, Amazon's largest landlord. So they build the warehouses and lease them out to Amazon. So we'd rather tell people that they can get real estate exposure that way than telling them they should go be a landlord. But if you want to do that, we encourage them to look at it like a business and treat it like a business.
I love that. That's great advice. When I'm hanging out with my friends that are non-physicians, they like to ask me questions like, "Oh, what do people come to you and complain about? Like, what are the mistakes people make when it comes to their GI health?" And as a financial advisor that sees the back end of a lot of people, if you were to say like some of the mistakes people make when it comes to their finances and planning their financial goals, like what are some of the common mistakes that if you had a sister that was a physician right now, you would go, okay, homie, these are the mistakes I'm seeing. Don't make these mistakes. What would those mistakes be from your perspective?
Yeah, so some common ones would be, um, yeah, I have accounts at Vanguard. And I think you mentioned this in one of your recent podcasts. They're putting money in, it's not getting invested, it's just sitting in cash. They didn't know, it's not their fault. You're not taught about this kind of stuff, but they didn't know that the money's not actually getting invested in any type of investment just by putting the money in. You have to click buy. There's a little bit more to it. So there's that one. tax return things. So if you might have heard of backdoor Roth IRA, that gets thrown around a lot. About 1 in every 5. So I started tracking this this past tax season. People are incorrectly paying tax on it. So you have already paid tax on these dollars, and it's showing up as taxable on their tax return. So that's, think last year for a married couple, that's $13,000. Take that times whatever your tax bracket is, probably 24%, 32, 35 for most of the people we're working with. Those are real dollars. And another one. So this is a new client. She has a W-2 and she has a business on her own. And in her SEP IRA, her advisor last year had her contribute $66,000 to it, which was the max. She changed advisors to us for other reasons, and we use the same custodian. So we both use Charles Schwab. So I can see the transaction history. I see on her tax return, she only got a deduction for $35,280, but she contributed $66,000. So now there's $30,000 in this account where she has already paid tax on it. But when she takes the money out of the account, she's going to have to pay tax on it because it's in a SEP IRA. So I call up the accountant, and we find she switched accountants too. You can kind of see she had some bad luck there. So we're coming up with a solution. So that's not going to happen. She's not going to pay tax 2 times on $30,000. She probably thinks I'm a genius. All I did was check. I'm just reviewing the information that you should be reviewing. So yeah, those are some common mistakes. Tax things come up a lot.
I'm curious. I want to hear more about the tax mistakes. So taxes are kind of interesting, annoying, and fun at the same time, potentially.
Yeah. One other bigger dollar amount one was, so as the market takes a dip, like it did in 2022, we don't advise on trying to time the market, get out, and when things settle, get back in. But one thing you can do, if you've ever heard of the concept of tax loss harvesting, so you just, while it's down, you switch one index fund for another very similar one. Can't be exactly the same. The IRS doesn't like that. It's called a wash sale, but it can be very similar. So if you sell the one that's down, buy a different one, then you stay invested. So you're not trying to time the market. It's not like you're going to miss the upside, but you get to take that tax write-off on your tax return. And we noticed that the amount that we did there, that we tax loss harvested, was not listed on this person's account. And this was a pretty big dollar amount account. So it was about $20,000. So you can do the math again on percentage of tax bracket there. So that's another thing, just reviewing the tax return, reviewing the documents that we have, making sure everything lines up. Sounds simple. Sounds like something everyone would do and should do. But the reality is people have a lot going on, and it's just not something that's on the top of your mind.
I love that. I mean, taxes are, I think it's so important to, as a W-2, there aren't too many opportunities to save on taxes. There are,
Right.
just aren't, right? So, I mean, those can add up really quickly for people when it comes to the taxes that you're not paying. And, we're in California, so there were things that happened. We filed extended this year. So we literally have our tax papers now that we're going through and reviewing as well. And it's a lot of pages, right? And I know that as physicians, we're so busy, or we believe that we're busy, that we don't take the time out. So with your clients, are you guys helping with the reviewing, or are you how does that happen in terms of how you service them specifically about the taxes? Because I think that's a huge asset.
Yeah, so we have some clients that do the investing on their own, kind of with our guidance, and that's totally fine. Our fees are the same, so we don't do an assets under management fee. So whatever you prefer to do there, but for the clients that we are doing the actual, I call it clicking the buttons for them, if they're working with an accountant, or really if they're doing TurboTax on their own, we'll provide those tax documents, and along with a summary of activity. Now, we provide that to the accountant as a way to head off things, try to make sure things are included up front, prevent mistakes. However, I do feel for accountants when it's April 10th and 400 people decide to give you their information, right? I understand mistakes happen. You're not going to go look at this extra document that this person's advisor created for you. Not everyone has a system in place like that, but that's something we do. And then once the tax return is done, we review it to make sure everything that we did for the year, the prior year, is included as we would expect on the tax return. So that's how we integrate with the tax side.
I love it. And I know on previous episodes, I've talked about the fees and fee structures. So let me step back a little bit. Let's just pretend like people are not listening and it's just you and I having a conversation. So they're good doctors, quote unquote. They're bad doctors, which are just, humans that are not kind that have a white coat on, or humans that are kind that have a white coat on. I don't think your white coat makes you good or bad. It just it's who you are that shows up under the white coat. So with financial advisors, if someone is listening right now, what are some things to look for in terms of like choosing an advisor potentially? And I've shared my story. I don't have an advisor. I had one when I first started. I fired that advisor really quickly once I realized that they were not making decisions that were in line with things that benefited me primarily. I was not the number one person in their life. And I did not like that. They were the number one person in their financial life, not
Yeah.
me. That hurt my feelings. So if someone is listening to this episode right now and you were going to guide them through what to look for in an advisor, how to know whether you're in the right space, the right person for you, and whether, we're going to share your contact information so people can come find you and your services. If you're on here, I've never worked with you guys professionally, but the interactions that we've had has been, you seem like decent humans, essentially. And so the question I have is what would someone be thinking, or how can people be thinking right now, whether if they have an advisor, am I in the right place? Should I be looking? And those sort of things.
Yeah, I think if the question whether I don't know if the right word is you should, but if you're someone who is looking for an advisor because you're either in a situation where you're just in a little bit over your head, maybe you're starting to make more money than you ever have before, and you just haven't had the time to study these things and what to do with your money, or whether you're someone who's just gotten to a point in your career where you've decided to outsource everything other than being a doctor, a mother, a spouse, those things. Things that I would look for is, ask them who is their ideal client. Obviously, I'm speaking my own book here a little bit, but we have narrowed who we work with, so we don't just take anybody that fogs a mirror and has money and is willing to pay the fee. It has to be a good fit for what we do. So make sure it's somebody where they're familiar with your types of situations, especially lots of physicians probably have high student loan debt. Make sure there's somebody that's familiar with that. I think fee structure too. I will say, just because someone works on a commission basis does not mean that person is a bad person or is a bad advisor. There are good people and bad people in both fee structures. Just because you're fee only in a CFP doesn't mean you're the best advisor either and the most ethical either. I would like to think that maybe it skews that direction, but that's how I see it. So it is important though to look at fee structures and know where the incentives lie. So if you're someone who doesn't get paid unless the advisor, if they're someone who doesn't get paid unless you buy an insurance product, that's probably a situation I would stay away from. If it's a situation where they get paid based on the amount of money they directly manage, that's probably not ideal either, just because there are some situations like we were talking about backdoor Roth IRA. There are reasons you would not want to roll, for example, an old 403B from residency into an IRA. That kind of takes away that backdoor Roth IRA tax shelter. So often it makes a lot of sense to get that money into your current employer's 403B or 401k, whatever you have. So that's why I prefer the flat fee model, where it's like, listen, I understand I'm going to pay this person this dollar amount, and you would only do that if you believe that the value you are going to get is worth some multiple of the fee you're going to pay. If you don't believe that after talking to this person that they're going to provide more value than the fee you're paying, then don't get into that relationship. But I think that's a better model for negating the conflicts of interest.
Any other? Those are really good. That was a big one, that second point you just talked about. And I love that you said it's not, and I think that's a problem. We say good, bad, and all that stuff. It's not, it's just what's their mission, what they've come, the story they've sold themselves. And I'm a huge fan of transparency. I can't tell you how many people that I've talked to that don't know how their financial advisors are paid, or what they're paying. And then once they start getting into the finances, they realize that maybe I'm not getting value. And that's a huge thing that we talk about here. It's a huge thing that I teach in the money school, which is a value-based way of thinking about your money and investing. If you're investing in something, I want to beat the stock market. I may not be, like, when it comes to people investing in their education through the money school, that's something that I always tell. That's one of our own goals. I want you to get more return by investing in yourself through joining us than you would if you put that money in the stock market. And it sounds like that's what you're talking about as well, is being in that driver's seat of what am I actually paying? Where is that money going? And am I getting more return? Significant. You don't want 1x. You want like more return. Your money better spent in this way. Does that sound like what you're saying?
Yeah, I think that's along the right lines. And at least the way we do it, if you ever feel that way, that you want to go a different direction for any reason, the last thing you pay is anything to do in the next 30 days. So like, we're not locking anybody into that. You have to be in the driver's seat of your own finances. You are the one that designs your life. You know what you want to accomplish. Our job is to make the money work as efficiently as possible around those things. So, yeah, you have to be in charge of your own finances. And yeah.
I love it. I love it. So if someone is listening right now and they're like, okay, you sound like you're not a serial killer, and it sounds like you're not going to serial kill my
Wow, that's a
money,
low bar.
and you're not going to serial kill my money, how can they find you? And maybe who is not the right fit for you guys to work with? That may be a good place to start.
Yeah, renfinancial.com, WRENNE financial. That's where you can find us. Who would be maybe not a good fit? So I tend to think that we've had some first-year residents come to us, and often there are some student loan things we can help with that are like really valuable. Things that I didn't know when my wife was in this situation. Things like little tips and tricks, like foregoing the 6-month grace period and just entering income-based repayment. Because guess what? If you were in med school and didn't make any money, your payment's going to be $0, and that's going to count toward public service loan forgiveness. If that sounds like your situation, I didn't know that back when my wife was in that position. So compare that to whatever your last 6 payments might be on PSLF when you're making, I don't know, $400,000. Probably a pretty good trade. So that would be one situation where we can help with a very like finite amount of things, and then we kind of send you off on your way. Or if you're a person that's, you're more in the camp of like, yeah, I invest in, I want to invest in stocks. I want to try to beat the market. There's not a lot of that, but we get some of those people that come to us. Sometimes, people might have $20 million, and it might sound like, oh, that's a great client for a financial advisor. Sometimes there are estate planning considerations there that doesn't fit our ideal client that we're working with. There are things that are extra and outside of that we're just not going to be the best person for you for that. There's going to be somebody else that knows the tips and tricks around that type of crowd. So it's kind of like a barbell end, right? One extreme to the other, but I think those are a couple examples of people that aren't the right fit for us.
Fantastic. No, this has been so helpful and so useful. And guys, we're gonna have the link to their website in the show notes, WRENNE.com.
Yeah, that's right.
Okay. Okay, all right, good. I was like, it's not financial. Okay. It's WRENNE.com. That's going to be in the show notes. So you guys can go ahead and schedule a consultation if you want to, if you choose to, if it sounds like this is something you want to explore. But But I want to say thank you for coming to share with us. Thank you for the work you guys do. What we do here on the podcast is we want to equip women physicians. We want to empower you to have money, to live the life you're called to live, to build wealth. And so every audience that we bring in is to be a part of that so you can learn from that. We're not making a specific recommendation, but I think it's worth it if that sounds like what you're looking for to reach out to some other people, because ultimately your life is of value, guys. And I want you to spend it in a way that you're called to live without worrying about money or letting money limit you. And if there's any way we can support you in that journey, that's literally what we do on this podcast. So thank you guys for listening. And thank you so much, Hugh, for coming to hang out with us. It's been a pleasure chatting with you again. And I look forward to staying connected. And maybe you guys will come hang out with us at our event next year. We'll talk about that when we're done with the podcast, actually.
All right, let's talk about that. Thank you for having me, Dr. L. Pleasure being here.
Bye, guys. Don't forget to share this episode if it was of value to you. Bye, everybody.